here we are, and we led you to it, but we're talking about markets and the tailwind that is AI. That's top of mind. We're not talking about rates. We're not talking about concerns of global economic strength. We're not talking about geopolitical headwinds. Why?
I think the interesting thing to think about is that this technology is disruptive to literally every single industry. So while there are always going to be cyclical concerns, whether it be one specific geographic region is slowing down or perhaps pressure of inflation or interest rates, at the end of the day, what we're seeing right now is literally every single industry being disrupted by the advent of AI. And so I think that discussion happens not in a vacuum, but it probably drowns out to a certain extent some of the more macro concerns.
Whenever there's a big trend, everybody always wants to play this silly game of trying to figure out what inning it's in. What inning are we with the weight loss drugs? Hey, how about with the electric vehicles? Or maybe with the Fed's next move? Could be the seventh there. We're clearly in the final inning of the Nelson Peltz proxy fight for a board seat or two at Walt Disney because Peltz didn't get the votes. But he could pick up a cool $1 billion in profit. Good investment, all things considered. But the inning game that bothers me the most is what inning are we in the artificial intelligence boom? For the last few days, we've seen everything coming down the AI space. And now people are arguing that because of the declining stock prices, we're in the late innings of this story. Perhaps it was all overdone to begin with. Fortunately, that wasn't enough to do that much damage today. Dow only slipping 43 points. S&P was up 0.11%. NASDAQ gained 0.23%, much stronger at 1 point today. But still, with the bellwether of AI, NVIDIA now down from its high of 974 to 889, down another $4.88 today. We're now being told that NVIDIA's GTC conference and its exciting range of supercomputers is just old hat. It's been replaced by the golden age of refining, sending stocks like Marathon, Pete, and Valero soaring. Oh, there's tech. Oh, it's the golden age of the dollar stores, with Dollar General and Dollar Tree both on fire. Despite reporting weak quarters this month, Dollar Tree's got a great candy aisle. We're hearing even that Chippy and Autocado, those two Chipotle robots, they're in the seventh inning stretch. Move over, NVIDIA CEO Jensen Huang. It's all about the oils and the golds. They've got the mojo per share. To which I say, hold it. Enough already. When you hear all this inning talk and the accompanying bubble chatter, it's clear that lots of investors have no idea what AI is, let alone generative AI, or what it'll be used for, let alone how its adoption represents a genuine industrial revolution, right up there with the steam engine. In fairness, the reason they have no idea is because we really haven't even seen anything transformative from the AI camp just yet, or at least nothing that's all that visible. It's true that artificial intelligence has suffused the design, changed sales tactics for Salesforce, or onboarding for ServiceNow. There's no doubt that inference has influenced you to buy certain products on Amazon that you might otherwise not have known about. You may have stuck, you'd be with Instagram or Reels because of ultra-fast speed for video. Dell will make money connecting you to the NVIDIA world. Dell actually roared, by the way, to a new all-time high today. People remember that it's doing very well. But in terms of innings, I don't think the AI game has even started yet because the tech's still too slow to matter.
The AI race is far from over. News broke recently that Tesla's CEO, Elon Musk, is reportedly raising an impressive $3 billion in funding for his AI startup, xAI, from trusted investors close to him, valuing the young company at a whopping $18 billion already. According to people familiar with the matter, the venture capital firm GigaFund and Steve Jurvetson, one of Elon's most prominent backers and co-founder of another venture firm, are among the backers considering investing in the round. But why is Elon raising money for xAI now? Let's find out. Before we dive into today's video, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video. When OpenAI released ChatGPT in 2022, it kicked off a generative AI race, with every company out there investing billions of dollars to stay in the race and keep up with the latest generative AI technologies. Last year, Bloomberg Intelligence reported that generative AI would become a $1.3 trillion market by 2032, from a market size of just $40 billion in 2022. Therefore, it's really no surprise that companies, whether they're tech companies or not, are placing their bets on this technology. And one of these companies is Elon Musk's AI startup, xAI, which was founded just 1 year ago. As you might already know, xAI has its own chatbot, Grok, which is seen by many as a ChatGPT competitor. Now, Elon is reportedly seeking to raise $3 billion for xAI, and this fresh injection of cash will give xAI the resources it needs to expand its AI engineering teams and boost its computing power, which will undoubtedly give Grok a massive opportunity to dominate the generative AI space. Before the Wall Street Journal reported the news, user @charity_trades on X, who often talks about Tesla's future outlook, tweeted that he received an invitation to invest in xAI at a $20 billion valuation. The invitation said that the current funding round is already oversubscribed by top-tier funds and institutional investors. And it also talked about the existing synergies between X, Tesla, and xAI, saying that xAI has access to X's 550 million monthly active users for both training data and distribution, and that xAI is already leveraging resources and expertise from Tesla. Remember when it was revealed recently that Tesla machine learning scientist Ethan Knight left the car company to join xAI? And all the other Tesla engineers who joined the AI startup, maybe that was all part of Elon's plan to integrate the two companies together. According to people familiar with the matter, terms of the xAI fundraising haven't been finalized and the plans could change. So how will xAI compete with its bigger rivals? Let's find out. Hello everyone, and welcome back to Investocracy.
And when I think about generative AI, I always feel like we covered it in reverse. We went straight to the consumer-facing chatbot, and not really how we got there along the way until GTC, when Jensen Huang walks into the middle of the showroom floor and praises Michael Dell and says, if you need a server, go to this guy.
Yeah.
What did you make of that? Because Dell is a name you hold, right?
I mean, this was new. This was absolutely new. I mean, he kind of called out and he's like, who else could make better end-to-end solutions for enterprises at a large scale than Mike Dell? And you could almost feel everybody go, oh, wow, and I thought that was really interesting because that's the next big leg that needs to come into AI is for there to be real strategic thought into how organizations, enterprises are going to really embrace generative AI and what it's going to actually do for this is very transformative. It's not like you just flick a light switch and there's an app and suddenly you have generative AI. I mean, a lot needs to happen in an organization. They need to de-silo their data. They need to train it. It needs to be in the cloud. There needs to be analytics around it. There's so much that actually needs to happen. And it'll be fascinating to see, what role companies like Dell play in this arena.
While competitors like OpenAI and Google entered the market first with their own AI bots, Elon is confident that xAI's technology and unique approach gives Grok the potential to surpass current market leaders. This is because Grok has what all these other companies don't, access to probably the most important dataset for training any large language model for human use. X is one of the world's richest sources of data for training an AI model, as it contains millions of human interactions, as well as important sources of info that are being constantly updated by its millions of users. You might say that Grok still has a long way to catch up with ChatGPT, but Grok has already made a lot of progress since its preview release just 5 months ago, and it's constantly being updated. Elon is also no stranger to defying expectations and toppling incumbents. Remember when Tesla first entered the auto market? Critics scoffed and said it could never compete with traditional auto manufacturers, and yet Elon proved them all wrong by out-innovating the competition and capturing huge market share. Elon is confident that history will repeat itself with xAI, and it all starts with Grok's technology. xAI recently unveiled Grok 1.5, which demonstrates massive improvements over the first version. In particular, Grok 1.5 will excel at math, logic, and coding. In addition to that, Grok 1.5 will be near GPT-4's performance, which powers ChatGPT. In important benchmarks, Grok came very close to achieving GPT-4 scores, and it even surpassed ChatGPT on the benchmark for mathematical problems, scoring 90%, while ChatGPT scored 67%. This means that Grok will likely be better than ChatGPT when it comes to solving mathematical problems. And considering ChatGPT's capabilities on just a GPT-3 foundation, this is an extremely promising sign that Grok can overtake ChatGPT once running on a model similar to a GPT-4 model itself. Beyond benchmarks, Grok 1.5 handles documents with 16 times more contextual information than before. This allows more nuanced conversations and understanding of complex relationships. xAI also open-sourced Grok, inviting collaboration to accelerate development. This aligns with Elon's motivation since co-founding OpenAI, then founding xAI, to develop AI safely for humanity's benefit. Overall, the stage is set for Grok to achieve superior performance to ChatGPT. xAI has access to data and engineering talent. All it needs is the necessary funding to develop Grok even more, and that's why the company might be raising money now. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
But our next guest sees today's news as a test of investor patience. Managing partner of Deepwater Asset Management and Fast Money friend Gene Munster joins us now. And Gene, you personally are amongst those legions of investors whose patience will be tested. So what are you waiting for?
Indeed. Melissa, first, I am bracing as someone who's been supportive of what Tesla's doing and optimistic about where this company can go. I was just stunned today. I think that this caught me off guard. I was expecting it basically to be flat. Deliveries is down 9%. And the first question I asked, first order of business, is how bad is it going to get? The panel's done a great job of articulating there's going to be more negativity. I just want to put that in a context, is that going into today, the street was looking for about 15% delivery growth in 2024. If you look at the numbers they just reported and assume that they can grow deliveries 10% sequentially for the rest of the year, deliveries will be down 3% for the year. So this is probably more ugly than it seems even today. And given that change and look what happened in the stock, I don't think that's fully priced in. So I think, Dan, you've been clear about that $100. I don't think we're going to see 100, but I do believe that the stock is going to go lower because this is going to be what I think is going to be kind of the kitchen sink, where you're going to see analysts, I had that job for a long time, throw in the towel and say that this is going to be over for a long time. So I want to start there. Second is the bigger picture. And I think, Tim, you were talking about just, this EV and the EV picture. Just to frame that in, that's a $2.5 trillion market. What's the auto market on a yearly basis? Eventually, of course, it's going to go EV. Panel appropriately talked about what's the timing of that. I think it's going to come faster than most people think, even though this is such an ugly day on the delivery numbers. And the reason is that I believe one of the biggest factors in this horrible number was that there was so much excitement around EVs. People who typically buy a car every 5 years probably moved it forward and bought it 3 years, pulled a lot of demand in. I think eventually that just starts. I'm guilty of being too optimistic, but I think eventually they get to the other side. And one final thought, Dan, you talked about FSD. I agree that that is an important piece here. If anybody's tried FSD, the beta that they just put out last week, it is a step function better than what they've ever done. And so I think that is going to come probably in the next year or two. And I believe that that's going to be another catalyst. So that's where I'm at.
What can they tell us, if anything, in the next quarter or two that can sort of, I don't want to say solve certain issues, but for instance, if they come out with a lower cost model, does that solve for some of the weakness that they will see in China and address that next wave of growth that investors are looking for? Is there sort of a couple of things that they can do that can make the story a little bit better?
So you've got two camps. You've got the people who believe. And the reason why the stock's not down more today is because that camp still exists. The reason why this still has the market cap it does is because that camp still exists. They're not going to be influenced probably by another couple punky quarters. That won't influence it. The people who are skeptical, there's nothing that Tesla's going to say over the next, when they report their quarter on the 23rd, that's going to get those people more optimistic. But as an investor, I think you need to fast forward to, I'm already thinking about mid-2025. And at that point, we're going to have some really easy comps. I mean, this is a down 9%, March of 2025. is we're going to start to get easier comps. I think that starts getting reflected in the stock probably mid to late this year. So that's kind of the time frame. It's going to be rocky for the next several months. I don't think there's much they can say, Melissa.
Many analysts are saying that Elon should focus on only Tesla and have other people worrying about xAI and X, but the success of xAI can actually really help Tesla and boost the company's stock. Since xAI is supposedly raising funds, Tesla definitely needs to get in and invest a substantial amount of money in the company to acquire an equity stake in it. This will stop the conflict of interest narrative with all the Tesla engineers moving to xAI and will also open the door for collaborations between the two companies. For instance, new Tesla cars could come with Grok installed for drivers to use it, maybe even by speech rather than text. A collaboration between the two companies could also result in adding a new feature to Tesla's FSD system, like a conversational system that can talk to drivers about the best routes to take to avoid bad traffic. Think of it as AI-powered GPS. Tesla acquiring a stake in xAI will also help Elon develop AI confidently in Tesla, as he has said that he wasn't comfortable making Tesla the next big AI thing if he didn't have 25% of the company. But Tesla's board agreeing to invest in xAI is also a really great incentive. Tesla could even pay Elon for a stake in xAI in the form of more Tesla shares, getting him to a higher ownership percentage, and this would honestly be a win-win situation for the two companies. Any or all of these scenarios would definitely give a boost to Tesla stock. But it won't be just Tesla that xAI would be helping, but also X. Last fall, Elon tweeted that X investors own 25% of xAI. So extra funding for the AI startup that values it at nearly $20 million could add nearly $5 billion to X's valuation. All of this sounds extremely exciting, but investors should wait for Elon to confirm whether xAI is actually raising capital or not. It's important to note that he has denied that the company was raising money in the past, so it could still be the same case here. Elon himself is open to the idea of Tesla investing in xAI, as shown in a tweet he made when he was asked about a potential deal between Tesla and xAI that would give Tesla a stake in the AI startup, as well as access to Grok AI going forward. He said that he'll discuss this with Tesla's board. But that doesn't mean Tesla's board would like the idea. So if Elon really wants this to happen, he'd need to convince them somehow. If xAI succeeds, it will be a boon for tech pioneers like Musk, who kept their ambitions for AI positive and grounded in wisdom. The world needs this technology controlled by leaders who will guide it toward uplifting humanity. What do you think? Is a collaboration between Tesla and xAI coming sooner than we think? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.